This is Pat Walker at Mission Winners, and we're doing a video of the leading stocks in the top 10 groups. You can say, Patrick, what do you mean by leading stocks? Stocks with a composite rating of over 90 that are near 52-week highs. No thin stocks, no low price stocks. That's what we're looking for. So let's just get to it and see what we have. And by the way, there aren't many stocks on this list. You can say, well, why isn't that? Look what the market's doing. When the market gets bad, there aren't as many leading stocks. It's just that simple. But we're going to go through here and show you this. This stock right here, In-Phase Energy, ENPH. This is in group number 2, Energy Solar. Nice consolidation pattern here. Last quarter's earnings were up 740%. Last quarter's sales up 128%. Nice tops right here, don't you agree? Going across these tops. Good volume on this bar, all right? Less volume on this pullback bar. And folks, when you factor into the equation what they're doing to the market, this stock's hanging in there. Relative strength of 99, okay? That's a plus. But I stress, two things you want. You want the market to be acting okay, and you want this stock to push through these levels across this top right here. You can see my price alert set. I'm going to lower it just a bit to be early. Take out those tops on volume in a good market. So that's Energy Solar. Here's the next stock on the list. Nova, all right, Sonova. Sonova only has an earnings per share rank of 20, a composite rating of 90, a relative strength rank of 98. Notice the chart, all right? By the way, this stock doesn't have earnings. Last quarter sales were up 33%. Accumulation distribution is A, but you can see it's a little bit choppy here. There's nothing, is there a safe setup? Here's the question you always have to ask yourself. Would I see this chart pattern in any book saying this is what you want to look for? This is the pattern that normally leads to big gains. And the answer is no. So you just have to wait. It's that simple. We don't have to, overthink it. All right? Next stock on the list is CUE, Q Biopharma. Q Biopharma. And again, the ticker symbol is CUE. And what do we have with this? Just share it with you. This stock has an earnings per share rank of 26. Doesn't have any earnings, but last quarter's revenue growth up 118%. Relative strength is 99. It's a biotechnology stock, as you can see. But I do point out something here, and I think this is very important. Is there a clean chart pattern here? I mean, is there a clean entry spot here at this point in time? And the answer is no. I also have to share this with you. And again, last quarter's revenue growth up 118%. You take a look at this, all right, it is biotechnology. It trades a little bit thinner. I'm not knocking it, but know that biotechnology can be great going up, but one news story can crush a biotechnology stock. Just factor that into your thought processes. I'm not saying don't buy it, but just be aware of that, all right? Can't stress that enough. The next stock on our list, okay, is Karyopharm. Got to pronounce that right. Let me see here. Yeah. Karyopharm Therapeutics, biotechnology. Now, what about this one? This stock doesn't have earnings, but it's got great revenue growth. Listen to this. 4 quarters ago, revenues, sales, 200,000. 3 quarters ago, $9.5 million. 2 quarters ago, $13.2 million. Last quarter, $18.1 million. All right. Now, this stock does 1.6 million shares a day, so that's good. Has a composite rating of 90. Look at this right here. That's pretty good. They had an offering is what that is, okay? That's the offering. So it's moving up, and that's good to see. Is there an entry spot? But again, it's biotechnology. What would you want to see? Well, there's no really clean entry here, is there? Wait a couple of days if you're going to do a biotechnology stock and see if by chance it forms one. And again, it has a relative strength of 99, which is very good. Next stock on the list is REGN, which is Regeneron. All right, this has been a stalwart. This has been a strong biotechnology stock for a long time. Earnings per share rank 92, relative strength rank 96, composite rating 99. That's good. Earnings are okay. Last quarter's earnings up 10%, last quarter sales up 13%. I mean, this is not robust, but it does have An earnings per share rank of 92 and a composite rating of 99. It's grinding on up. Look at the chart. It's a leader. But my question for you is this. Is there a spot to buy this at this point in time? Is there a low risk entry spot here? I'll ask you, is there? You don't like buying stocks that are extended from a proper entry spot. Is it extended? Yeah, so you have to wait on it. It's that simple. The next stock on our list is Kinixa. I got to get that right. Excuse me. Kinixa. I think that's how you pronounce it. Now, this stock has an earnings per share rank of 30. It's got a composite rating of 92. Relative strength is 98. You can say, wow, that's pretty good. Well, look at how this thing's outperforming the market. It doesn't have any earnings. They don't have sales numbers posted either, okay? Accumulation distribution A. There's no clean entry at this point in time, but perhaps in a couple of days it will have one. One thing I must say though, it is biotechnology. Always factor that into your equation. All right, now we get out of that realm and we go with Allergan. Excuse me, that used to be the old ticker symbol for Allergan, okay, way back in the day. And they still have it listed as that. This is Algonquin. Oh, I got the wrong ticker symbol. Excuse me. I'm sitting there going, no, wait, that's wrong. Hold on a second. Let's put the right one in here. I've known Allergan forever. All right. So Algonquin Power and Light. It's alternative energy. Okay. Renewable power generation. That's good. Last quarter's earnings up 43%. It's got an earnings per share rank of 92. Composite rating of 95. Relative strength is 94, leading in a new high ground. And you can see why. The market's gotten killed and this stock's hanging in there. That's excellent. They're based out of Canada. Is there a clean entry spot? Not at this point in time. Where could there be? If it just goes across these tops right here. You see that line I just got? Right there. Take out those tops right there above 1670. Best thing that could happen, it goes sideways for a while and then it takes off. Will it? I don't know. I don't know, but doesn't look bad. Doesn't look bad at all. Next stock on the list, and we know this one, let me tell you. We own this one. VIPs own this. Dexcom. Look at this. Look at that breakout. Marches up. Earnings. People talk with their mouths and vote with their pocketbooks. You think they voted? The market's gotten spanked hard. This stock's staying above the 20-day, the rising 20-day. Now, am I saying it's going to pounding the table, it's going to continue? I don't know the future. Nobody does. I don't forecast. But so far, it's hanging in really good in a rough market. Stock's got an earnings per share rank of 76. Composite rating 99. Relative strength 98. Leading the stock in a new high ground. There's power there. Again, we picked it up here. Look at this thing march on up. Earnings come out. Look at the support. There's a valuable lesson for all of you. Look at the support at the 20-day. The rising 20-day. That's something very important to remember. Trending on an 8-day, a 20-day, a 50-day. That's how we were able to stay in Tesla for up to almost 600 points. Let trends work for you. It makes it easier. And again, last quarter's earnings up 105%. Last quarter's sales up 37%. Composite rating 99. Relative strength 98, leading to new high ground. So, what would we like to see? Maybe it'll go sideways for a couple more days and then take off. That would be safe. Another great lesson for you. People say, oh, that's a red bar. I want to show you something here. Here's a great lesson for you. I enlarged it. You can say, oh, that's a red bar. That's a down bar. I want you to look closely at where it opened, right there. You see that little hash mark to the left? And then it fell. And then it rallied back up. This stock in a crummy market closed below where it opened. I'm saying it again. This stock gapped down from the previous day, fell, and closed above where it opened. Above where it opened. That's power on a pickup in volume. That's the work we do. That's what sets us apart. Analyzing it. By the way, am I looking at any 5-minute charts on any of these? No. Never. Don't get wrapped up in that. We don't day trade either, okay? Just for what it's worth. So let's continue onward here. Cogent. CCOI. Earnings per share rank 91. Composite rating 97. Relative strength is 97, leading the stock into new high ground. All right. It's got Great chart here, great group. And again, accumulation distribution is A-. But look at the chart, and I'll ask you this question. Is there a really safe entry right here? And the answer is no, not really. I mean, I do like these tops here. Okay, look at the close here, the close here, the close here. Very tight, but it is a little bit extended from a safer entry spot. Take that into consideration if you're going to buy it. Just wanted to pass that on to you, okay? Next stock on the list is Everbridge. Going sideways. Earnings per share ranked 64, but last quarter's earnings up 156%. Last quarter sales up 37%. Relative strength 95, leading the stock in a new high ground. Composite rating 97. I don't know if you could tell, but I kind of get excited about stocks. I think it's awesome. I'm always looking for the next big winner. Going sideways, note this. This stock, this is the 8-day exponential moving average. Note this. The stock, by the way, using the 8-day is related to a story related to Ed Sakota, who I had the great pleasure of meeting years ago. Look at this. Gaps down, falls. In a crummy market, this stock closes above where it opens. Closes in the top 10th of its range for the day on a pickup in volume. That's power. Now, am I saying buy it? No, I'm not saying that. But I am saying this is a stock that's demonstrating strength. Strength begets strength. Something to remember. Something to remember. And then finally, Zoom. Right here. Zoom video. Earnings per share rank 84. Composite rating 99. Relative strength 97. Last quarter's earnings, by the way, when we bought this right here, I'll show you something. Watch this. This will make you happy. Right there. That's where we bought. Right there. Breaking across these clean tops. Look at the volume surge. The day before, the stock did 2.3 million shares. On the breakout, stock did 5.7 million shares. Earnings were up 800%. Sales were up 85% before we bought it. Okay? And it just made a really nice move. Right here, 94, on up. Went from 94 to 127, 128. That's good money. It's nice. You say, are you still in it? Well, yeah. It's walking up the 8-day. It's walking up the rising 20-day. That's how you stay with stuff. This is things we do. Shrink that back down so you can see it. There we go. Now you can see it, the chart. So, boy, you got to sell. Why? Why? It's trending. You know, there's a quote you hear a lot, and it's this. You'll never go broke taking a profit. That's a lie. All right? That's a lie. If your losses are bigger than your profits, you'll go broke. So what's the moral of the story? A, limit losses. B, let your profits go as long as humanly possible. And how can you do that? Well, going for a long time is a trend, right? It's trending up. Use the 8-day exponential. Use the 20-day simple. Use the 50-day simple. Let it work. Just let it work. When's it going to stop? I don't know. Nobody knows the future. But I do know this. I can let a trend work as long as possible when I have rules with moving averages. Anyway, I wanted to share that with you. Those are stocks in the top 10 groups. Market's rough. Be careful. Please be careful. All right? And I thank you.